Hello, everyone. This is Michael Morris. I'm the Executive Director of the National Disability Institute and glad to open this webinar series with you today. Exciting because we have participants from all across the country joining us. This is the beginning of 5 weeks of Wednesday webinars in the ABLEtoSave webinar series. Brought to you by the ABLE National Resource Center in collaboration with multiple federal agencies, over 20 of the state ABLE programs, and others you will hear about today. We appreciate the many national disability organizations that have joined with us for this exciting month of really helping people understand better all about the ABLE Act and how to open ABLE accounts. This webinar is brought to you by the ABLE National Resource Center and sponsored by Fidelity Investments. I'm going to turn it over now to Chris Rodriguez, the Director of the ABLE National Resource Center, with some quick hints about how to listen effectively and participate in the webinar, and then we'll bring on our guest speakers. Chris?
Great, thank you, Michael. So just to go over some technical issues to begin with before we start the webinar. In terms of listening to the webinar, the audio for today's webinar is being broadcast through your computer. Please make sure that your speakers are turned on or your headphones are plugged in. You can control the audio broadcast via the audio broadcast panel. If you accidentally close the panel, you can reopen it by going to the Communicate menu at the top of the screen and choosing Join Audio Broadcast. If you do not have sound capabilities on your computer or would just like to prefer to listen by phone, you can dial in at the numbers provided on the screen right now. These were also provided in the email that you should have received just after registering for the webinar. Captioning, real-time captioning is provided during this webinar. The captions can be found in the media viewer panel, which appears in the lower right corner of the webinar platform. If you'd like to make the media viewer panel larger, you can minimize other panels such as the chat, Q&A, and or participants. In terms of submitting questions, please use the Q&A box to submit any questions you have during the webinar, and we will direct those questions accordingly during the Q&A portion. If you are listening by phone and do not have not logged into the webinar, you may also ask questions by emailing questions to KAUCHENBACH@ndi-inc.org. It's important to note also that the webinar is being recorded and the materials will be placed on the ABLE National Resource Center website at the following link. If you experience any types of technical difficulties during the webinar, please use the chat box to send a message to the host NDI admin, or you may also submit your email to, again, KAUCHENBACH@ndi-inc.org. Okay, so just briefly, I'd like to touch on our presenters and guests that will be helping us out today. I will be presenting. My name is Chris Rodriguez. I'm the Director of the ABLE National Resource Center. We also have Michael Morris, who is the Executive Director of National Disability Institute, and I'm happy to include our guest panelists, Heather Sachs, who's a Senior ABLE Advisor here at the ABLE National Resource Center, Stuart Spielman, who is Senior Policy Advisor and Counsel for Autism Speaks, and Keith Bernhardt, who is VP for Retirement and College Products at Fidelity Investments. Very quickly, we want to take a look at the agenda. We have a lot to cover today. We're going to be talking about what is the ABLE National Resource Center. We're going to briefly touch on the hashtag ABLEtoSave campaign. We're going to review the history of ABLE, or the history of the ABLE Act. We're going to talk about some of the basic components of the law and of ABLE programs and accounts. And then we're going to move into a section where we're going to utilize some of the expertise from our guest panelists to debunk some of the more common ABLE myths that we have been hearing over the last year or so as these programs have been available. And then I'm hoping at the end of that we'll also have time for some Q&A. So let's go ahead and get started. So the ABLE National Resource Center. The ABLE National Resource Center is a collaborative whose supporters share the goal of accelerating the design and availability of ABLE accounts for the benefit of individuals with disabilities and their families. We bring together the investment, support, and resources of the country's largest and most influential national disability organizations, and we really strive to be the one-stop shop for all things related to ABLE accounts, ABLE programs, and the ABLE Act. And for more information, we encourage you to go to our website at www.ablenrc.org. Okay, I want to briefly introduce everybody to the hashtag ABLEtoSave campaign. Hashtag ABLEtoSave is a month-long marketing and informational campaign taking place throughout the month of August. This national campaign is spearheaded by the ABLE National Resource Center in collaboration with the center's 25-plus national disability organizational members, state ABLE programs, financial institutions, and other ABLE-related stakeholders. The campaign strives and will strive to blanket the country with widespread information concerning all things related to ABLE, with the aim to significantly accelerate the opening of ABLE accounts by eligible individuals with disabilities and their families. Again, the goal of the campaign, the primary goal of the campaign, is to increase awareness and education about ABLE accounts, and again, to really strive to accelerate the opening of these accounts nationwide, both in the short and long term, so that people with disabilities can really realize the vast benefits behind this transformative new law and subsequent programs. Very, very quickly, I just want to give a quick outline of the campaign. Again, it's going to take place throughout the entire month of August. We've broken the campaign down into 5 individual weeks of education, information, and marketing. Each week will focus on a different aspect of ABLE, with the aim, again, to provide potential ABLE account owners and their families with comprehensive education and motivation to feel comfortable with enrolling in an ABLE program. You can see under this the different topics related to each week, and it's important to note that the information that we'll be covering today, while we're going to be covering a lot of information very quickly, many of the main topics that are included in this presentation we will dive into greater detail in the weeks to come. Okay, so with that, let's get started. Let's talk about the history of ABLE. So what exactly is ABLE? Well, ABLE is technically the Stephen Beck Jr. Achieving a Better Life Experience Act, and what it does is it amends the federal tax code to add section 529A. And what does that do? That creates a new option for eligible people with disabilities to save money in tax-exempt accounts that may be used for qualified disability expenses while still keeping their eligibility for federal public benefits. And we're going to break down those different things that are highlighted, because I know those are, to a certain extent, loaded terminologies, and we really have to understand what each of those mean in order to feel comfortable with enrolling into an ABLE program. So, very quickly, just a little history about the ABLE Act. So where did this idea come from? It really came from a group of parents actually in Northern Virginia sitting around a kitchen table wondering why they're allowed to save for the future of their typically abled son or daughter, but how in many ways they are prohibited from saving for their child with a disability, and trying to figure out how can they remedy that, how can they appropriately save money for their son or daughter with a disability, or if the person is of adult age themselves, being a person with a disability, save for their future without falling victim to any of the disincentives that are often experienced by people with disabilities when trying to save significant amounts of money, and perhaps not even significant, just amounts of money as modest as just $2,000. So they moved forward on a 9-year massive cross-disability grassroots effort which utilized social media campaigns, traditional media, change.org petitions, and many, many in-person meetings with elected officials to share their personal stories on how the components of the ABLE Act would help them as family members of people with disabilities, but also help people with disabilities themselves who want to exercise more independence over their finances and be able to, again, save for their futures. After that incredibly long campaign, after 9 years of advocacy, again on the local, state, and national levels, the ABLE Act became law in December of 2014. And by the time it made its way to the President's desk, it had overwhelming bipartisan support in both the Senate and the House. But it is important to note that while this is a federal piece of legislation, the law does not mandate states to build or develop these ABLE accounts. It only authorizes or allows them to build these ABLE programs. So each state actually has to do it and has to choose to do it on their own through their own state legislation. We were happy to see that quickly after the ABLE Act was passed into law on the federal level, states reacted very quickly by passing their own ABLE-related legislation that would allow them to begin the process of developing their program. The first ABLE account was opened in June of 2016 by the Ohio Stable Program, which was the first program to get up and running. Since then, 25 states have launched ABLE programs, with the majority of those states opening enrollment nationwide, meaning that you don't actually have to live in that particular state in order to enroll in their program. And we'll talk about that a little bit more here in a bit. Okay, so now that we've covered a little bit of the history behind the ABLE Act, let's talk about some basic characteristics of ABLE programs. So these are going to be things that are going to be consistent across all ABLE programs because these are things that are found in the federal law and in the federal rules and regulations. So there are eligibility requirements related to opening an ABLE account that speak to the age which the individual first experienced their disability and related to the severity of such disability. So it's important to note that not all people with disabilities are currently eligible to open up an ABLE account, and there are certain eligibility requirements to be allowed to do so. An eligible individual is not obligated to enroll in their state of residence, like I just mentioned in the previous slide. It's important to note that the designated beneficiary is the account owner, and that's very important to make sure that people with disabilities who are ABLE account owners can exercise as much independence over the finances and the funds in the account as possible. That being said, there are other people who could have what's called signature authority or exercise authority over the account on behalf of the account owner, the person with a disability, if that person doesn't have the capacity to oversee their account or if they just would like to have somebody else help them or oversee the account for them. And that can be the parent of a minor, a person who has guardianship, or a person with power of attorney. Additionally, funds in the account can be used for what's called qualified disability-related expenses. We'll talk about those more in a little bit. And one of the greatest things, or perhaps the greatest thing about the ABLE Act and ABLE accounts and ABLE funds is that assets in and distributions for qualified disability-related expenses will be disregarded or given special treatment when determining eligibility for most federal means-tested benefits, including Social Security benefits and Medicaid. Multiple individuals may contribute into an individual's ABLE account, including friends, family, and certainly including the beneficiary or the account owner themselves, perhaps as a result of funds that they've been able to earn as a result of employment. It's important to note that there is a $14,000 annual contribution limit per ABLE account, of which an individual is only allowed one account per eligible individual, and that's all contributors combined. An ABLE account is not able to receive more than $14,000 from all those contributors combined in any given tax year. Okay, so let's very quickly talk a little bit about eligibility, because I did mention that not everybody with a disability is eligible to open up an account. So what does that mean? Well, in order to be eligible to open up an account, you need to meet two requirements. The first is an age requirement that states that the individual must have had an onset of disability prior to their 26th birthday. So the person must have first experienced their disability prior to turning 26 years of age. So let's say that that is met. They also need to meet a criteria that's based around the severity of their disability. And that states that if the individual is determined to meet the disability requirements for supplemental security income, or SSI, or Social Security disability benefits, and are receiving those benefits, and again also meet the age criteria, then they're eligible to open up an ABLE account. Now let's say that the individual meets the age requirement but is not currently a beneficiary or not currently receiving SSI or SSDI. Well, they may still be eligible to in fact open up an ABLE account, but they would need to submit what's called a disability certification, assuring that the individual holds documentation of a physician's diagnosis and signature, and confirming that the individual meets the functional disability criteria that's stated in the ABLE Act. Okay, so we understand a little bit about who's eligible to open up the accounts. Now, what exactly can the funds be used for, right? Well, distributions from an ABLE account can be used for what's called qualified disability expenses. But what exactly are qualified disability expenses? These are expenses that relate to the designated beneficiary's blindness or disability and are for the benefit of that designated beneficiary in maintaining or improving his or her health, independence, or quality of life. So that's a very broad definition of what these funds can be used for, and we wanted to make sure that it was stated in that particular manner because we understand how diverse the needs of people with disability are, especially folks that have disabilities to the severity that would allow them to open up an ABLE account. Additionally, just to get a little bit more specific, the term qualified disability expenses, again, should be broadly construed to permit inclusions of even basic living expenses and are not limited to things that are specifically have a medical need to them. So it's not necessarily like Medicaid or health related things. It's much, much broader than that. The next slide shows you some of the categories that have been laid out by Congress that these qualified disability-related expenses could fall under. Again, as you can see there, it's a pretty long list and can be broadly construed. It's also important to note, though, while you can spend ABLE funds on a wide variety of different qualified disability-related expenses, if you do make distributions that are for non-qualified expenditures, they will be subject to tax consequences and in fact may even affect the individual's eligibility for federally means-tested benefits. So we want to make sure that these funds are used appropriately so that the beneficiary, the account owner, the person with a disability doesn't fall victim to any unfortunate consequences. Okay, so let's talk about a little bit more about how the funds in an ABLE account impact eligibility for federal benefits, because this is one of the greatest parts, in my opinion, about ABLE that helps people save for their future. It allows them to save without jeopardizing these means-tested federal benefits such as SSI, supplemental security income, and things like Medicaid. But there is one exception, and that relates to account owners who are also beneficiaries of supplemental security income, and it states that for SSI beneficiaries, only the first $100,000 in the account assets will be disregarded. So what that means is that once a ABLE account owner's account exceeds $100,000, and if they're on SSI, they're receiving that cash benefit, that monthly cash benefit provided through supplemental security income will be suspended once the account goes over $100,000 until such time as the account falls back below $100,000. So that's something to take into consideration. But of course, I don't think folks need to worry about that right now because, as stated previously, the accounts can only accept up to $14,000 per year, and the accounts have only been available for about a year. So it's going to take some time for folks to start to inch up on that $100,000 threshold. And it's also important to note that there will be ABLE account owners, and there are currently ABLE account owners who are not beneficiaries of SSI, so they don't even need to worry about this particular provision at all. Okay, let's talk a little bit about Medicaid, because I know that a lot of folks have access to Medicaid through their eligibility for SSI. So a big question is, well, if my account goes over $100,000 and my SSI cash benefit is suspended, what happens to my Medicaid? nothing happens to your Medicaid if the account goes over $100,000. And that's important to understand because we all are keenly aware of the vast benefits and significant benefits that are provided through the Medicaid program that help people with disabilities live independent lives in their community. And we want to make sure that they're not left vulnerable to losing that Medicaid under any circumstances, and certainly not circumstances related to having an ABLE account or for saving money in an ABLE account. There is one other provision that relates to Medicaid, however, and that's called the Medicaid payback provision. And this states that any assets remaining in an ABLE account when a beneficiary passes away, subject to outstanding qualified disability expenses, including funeral and burial expenses, may be used to reimburse the state for Medicaid payments made on behalf of that beneficiary after the account is created. So that's an important provision to understand and to be aware of what happens to the money if the person is receiving Medicaid supports and services and also has an ABLE account. If the person passes away and has never received Medicaid supports and services, then they don't have to worry about that. Then the funds would just go into their estate once they pass away. So, tax treatment of an ABLE account. So contributions made to an ABLE account are made with post-tax dollars, and ABLE account earnings grow tax-free and are tax-exempt. So there's a significant tax benefit to the funds that are contributed into the account that are, in fact, in most circumstances, actually invested. So the interest yielded by those investments, again, grows tax-free, and when dispersed is, in fact, provided that it's used for a qualified disability-related expense, is tax-free once you take the money out as well. So that's great. Now, while there are no federal income tax deductions related to contributions made into an ABLE account, some states do actually provide state income tax deductions or credits for contributions made, usually by in-state residents. And those list of states down there are states that currently have laws that would allow for state income tax deductions or credits related to contributions made into their ABLE programs. So that's another incentive. Again, like I mentioned previously, there are, as of I think yesterday or 2 days ago, a couple more states came aboard in launching their ABLE programs, making it 25 states and counting that have launched ABLE programs across the country, most of which, again, are offering enrollment nationwide, meaning that you do not have to live in that particular state in order to enroll. However, there are some states, as listed in this slide, that do have in-state programs, meaning that you can only enter into those programs if you are a resident of that particular state. So we see that there. We're excited. We anticipate that by the end of the year, we will have breached 30 states having launched ABLE programs, and we expect more to come in 2018 as well. So, and to figure out where your state is in terms of launching or in terms of developing a program, you can always, again, visit the ABLE National Resource Center website. On the front page, there's a giant map of the United States. You can click on any one of those states to figure out if the state is launched, or you can just actually look at it. All the states that are blue on the map have launch programs, and by clicking them, you can read a little bit more about their particular characteristics in their states. So, all right, so we've gone through an incredible amount of information in a relatively short period of time. Again, I know some of the things that we talked about involving eligibility and involving what you can spend the funds on and things like that may seem a little cumbersome. However, we're going to be diving into each of those topics more specifically over the next few weeks. In fact, next week we just concentrate on eligibility. The third week we just concentrate on what the ABLE funds can be used for. The fourth week we talk about kind of the investment side and the financial literacy side of ABLE. And then the fifth week we talk about the actual process of enrolling in an ABLE program and the different things that you might want to take into consideration when choosing one program over another. So while we went through a lot of information pretty quickly, rest assured that we're going to be diving into each of those topics in much greater detail in the coming weeks. A lot of those will be have dedicated webinars just to those topics, so we encourage you guys to follow the hashtag ABLEtoSave campaign and to keep an eye out for registration for those webinars. So moving forward, I want to address some of the myths behind ABLE. As you can imagine, there's a lot of misinformation about this new program, and we've been working closely with the ABLE state programs and with the financial institutions involved with ABLE and with our 25+ member organizations to better understand how people are interpreting these accounts, what is exciting them about these accounts, and perhaps what are some of their hesitations behind opening accounts. We know right now that there are around 10,000 accounts that have been opened nationwide, but we also estimate that the number of eligible individuals for ABLE accounts could be as high as 7, 8, or 9 million people across the country. So we want to make sure that people feel as comfortable as possible in opening these accounts so that they can have this new ability and opportunity to save for their futures and create a more economically sound future without jeopardizing their federally funded means-tested benefits. So we've collected some of the things that we've been hearing out there that oftentimes are in fact not true, and we want to address them over the next few slides. And I'm going to be reaching out to both Stuart and Heather, two of our guest panelists, to help me remedy some of these myths. So let's go ahead and get started. And the first section is going to be talking about some of the myths or misinformations that we hear surrounding eligibility. I'm going to reach out to Stuart to help me out with clarifying these. So as our first myth, we often hear that individuals have to be receiving SSI or SSDI benefits to be able to open up an ABLE account. And Stuart, what is the factual evidence behind that? What's up with that myth?
Well, Chris, it's not true that you have to be an SSI or SSDI. In fact, kids and others who are not on SSI and SSDI can qualify for an ABLE account. What they will need to do, though, is get a disability certificate, which is a document signed by a physician confirming that they meet the severity of disability standard that the law sets.
Gotcha. Okay. Well, thank you for clearing that one up. I know that another misconception that we often hear is that an individual must be younger than 26 to be eligible to open up an account, and if you have a disability such as my brother, who's actually 35, that he wouldn't be able to open up an ABLE account because he's older than 26, despite the fact that he was born with his disability.
That's also, as you describe it, a myth, Chris, and this is important for a number of individuals. People on the autism spectrum, for instance, may get a diagnosis after age 26 or later, and the diagnosis, the timing of their diagnosis does not disqualify them from opening up an ABLE account, because autism, like a number of other disabilities, dates back to birth. And so a later diagnosis would not be a disqualifier from opening up an ABLE account. As long as the disability was present, even if undiagnosed, before age 26, the individual would qualify.
Excellent. Yeah, that's a great example, Stuart. Thank you. Okay, moving on. We also know that there's a lot of misconceptions around how people make contributions into an ABLE account, and for that, we have a couple of the more common misconceptions. I'm going to turn to Heather to help me out with these. So our first misconception or myth is that only the individual who can contribute to an ABLE account is the designated beneficiary, meaning that only the account owner, only the person with the disability is allowed to actually contribute into their ABLE account. Heather, is that true? Uh-oh. Heather, you might be on. Oh, there you go. We're hearing you. Go ahead, Heather.
Okay, so that is not true, and I think part of the confusion regarding this myth is that the ABLE account owner is the beneficiary. So, Chris, as you had explained earlier, the person with the disability, or if it's a minor child or someone subject to a guardian or power of attorney, are the only people that can actually open the account and control the funds in the account. So I think that's where a lot of the confusion lies. But anybody can make a contribution to the account. So it could be the individual with the disability who happens to be the beneficiary. It could be their parents, grandparents, friends, an employer. Really anyone can make a contribution to the account up until the contribution limit, which we can talk about in a little bit.
Okay, great. Yeah, that segues nicely into the other misconception or myth that we often hear, or there's confusion about, which states that an unlimited amount of money can be deposited into an ABLE account. Is that true?
So unfortunately, that is not true, and I think it gets a little bit confusing because there seem to be some arbitrary numbers thrown out there in the federal law. As ABLE, as Chris mentioned, it was a 9-year effort to get it passed through Congress, and as it went through Congress, as what usually happens, compromises need to be made, tweaks need to be made to the bill in order to get the score of the bill down, or how much it's going to cost the federal government. One of those tweaks was adding an annual contribution limit, which is tied to the federal gift tax. So it's currently $14,000 total. So that's the aggregate of all contributions going into a single account can only be $14,000 a year. Now, this amount will be adjusted periodically for inflation, but as I said, it is tied to the federal gift tax. Now, another number which seems to confuse folks in terms of the contributions is that magic $100,000 number. As Chris mentioned, when an account gets up to $100,000. Now remember, because you can only put in $14,000 a year and ABLE accounts are relatively new, it's going to take folks quite a while to accumulate the funds to even get into this situation. Once the account exceeds $100,000, then your SSI, supplemental security income, is suspended. You are not terminated. Basically, you just have to spend down under the $100,000 in order for the benefit to kick back in. However, some people falsely believe that $100,000 is the upper limit of the amount of contributions that can be made to the account. And in most states, that is not the case. In most states, it is actually tied to whatever the state cap for contributions to a regular 529 account would be. So typically that's somewhere between $225,000 and $550,000 per account. There is one state, I know, California, that does have the $100,000 cap, and they are actually trying to change that legislatively. But most of the other states, you can go up to whatever the regular 529 cap is, but you just have to be careful when you hit $100,000 that your benefits are going to be suspended for SSI.
Right. And that's only, gotcha, yeah, and that's only if the person's on SSI. Gotcha. All right, well, thank you. The next topic in terms of our myths are going to have to do with public benefit, which is an incredibly important area of ABLE to understand because, again, we all appreciate the very vastly significant benefits that are provided through different programs such as SSI and such as Medicaid. So let's go back to Stuart. So I hear a lot of folks saying that they understand that once their ABLE account goes over $2,000, they'll lose their eligibility for things like SSI benefits and Medicaid.
So
is that true?
That's not true, Chris, and I can tell you that those of us who worked on ABLE were very mindful of this potential trap. We certainly didn't want to create a situation where your ABLE account would be at the expense of eligibility for public benefits. So Medicaid and ABLE are separated. There is a link with SSI. You don't lose eligibility for SSI, but if down the road, and Heather brought this up, and you brought this up. I mean, we're not talking about a present situation where your SSI benefits would be suspended, given that the cap but potentially you could have your SSI benefits suspended, not eliminated. You would keep your eligibility, but your check wouldn't be delivered. But your eligibility is good, and ABLE does not. Having an ABLE account is not going to affect eligibility for federal means-tested programs.
Right, right. And if folks wanted to read more of the technical stuff, I think we'll be getting into this probably next week. But Social Security Administration has released formal or guidance related to ABLE funds and Social Security. Is that right? And those are called PALMs. Is that right?
Yeah. So that's their manual, and it's actually available on the Social Security website. And even though it is, you know, an operating manual, it's quite readable. It's not off-putting in the way that some technical guides are. It lays out things in clear language and covers a variety of situations.
Gotcha. Okay, great. Thank you. The other myth that we often hear is in all circumstances, the Medicaid program will receive the balance remaining in the ABLE account upon the beneficiary's death. And I know that a lot of folks, obviously with good reason, are very interested in knowing specifically about the Medicaid payback provision. So in all circumstances, are there any exceptions out there, or is there any ideas of exceptions?
Well, you know, this has been an issue that people bring up, and you know, it's important to remember that the claim is against the account, and if money is spent from the account, then there may not be a claim. But it's not mandatory. The state has an option to file a claim for the amount of Medicaid services paid. So this is, you know, again, I would emphasize this is an issue that, you know, this is an issue that I think may concern people, but I think their concerns have to be tempered by the limitations on filing a claim. A lot of states don't file Medicaid claims. Some do, but I think this is something people should be aware of, and it's not. You know, you're not going to. It is not absolutely clear that you're going to be subject to a payback.
Gotcha. Okay. All right. Thank you. So let's talk a little bit about some things that we've heard related to other financial vehicles that are often used by people with disabilities. There's certainly a misconception or a need for more information by families and by people with disabilities in terms of how an ABLE account could interact with a special needs trust, or whether one replaces another, or if you can have both. And the pros and cons. So, Heather, does an ABLE account, in fact, replace a special needs trust?
No, absolutely not. We always say that ABLE accounts are just another tool that's now available in the financial planning toolbox for people with disabilities. Both ABLE accounts and special needs trusts are excluded from eligibility determinations for SSI and Medicaid, but there are some very notable differences among them. For example, there's no limitation on contributions to special needs trusts or the number of special needs trusts a person can have, whereas ABLE is limited to one account with a $14,000 a year contribution and a $100,000 threshold for suspension of SSI. But ABLE accounts grow tax-free, and income from special needs trusts is taxable at a very high rate. And I think most significantly, the startup costs for ABLE accounts are very minimal, whereas startup counts for special needs trusts may be over $1,000 in legal fees. So these are just two very different financial vehicles, and it's really up to the individual person and their family and their financial advisor to decide, you know, whether one is the right option, or in many cases, I think both will be a good option for folks to have.
Great, great. So just to be clear, you can in fact have both a special needs trust and an ABLE account, correct?
Yes, you absolutely can.
Great, good to know. Stuart, how about this next one? Folks, because that they're so related in terms of the tax provisions in the tax law, a lot of people think that ABLE accounts are basically the same as regular 529 college savings accounts. Could you take us through why people might think, or why people associate them closely with, and then why they are actually different?
Yeah, so for one thing, there's a similarity in code sections. ABLE accounts are 529 Cap A accounts, and the college savings accounts are under Internal Revenue Code section 529. While there is some overlap between the accounts, for instance, both accounts can be used for educational purposes, there are marked differences. ABLE accounts can be used for things that college savings accounts cannot be used for, such as doctor's visits and other expenses that are related to an individual's disability. So these are financial products. Both of these are distinct financial products that share a heritage and have some overlap, but have some very important differences.
Gotcha. Okay. Very good to know. And just to be clear, there's several different names or nomenclatures of ABLE accounts. So I've often heard of people talking about them as 529 Cap A accounts, like you mentioned. That's just a technical term for the accounts, is that correct? They mean the same exact thing as an ABLE account and a 529A account are the same things, correct?
Sure. So, the many of us who were tax lawyers refer to Internal Revenue Code sections to describe things, but most people may be familiar with ABLE in a much more personal and even a local way. If you're in Ohio, you may think of stable, or if you're in another state, you may think of that state's named ABLE account. There are going to be different names for these accounts, but what we're getting at is a tax-preferred vehicle for individuals with disabilities to save for current and future expenses.
Gotcha. Okay, thank you, Stuart. So our last category in terms of myths before we kind of look at how these things look like on the ground from our third panelist has to do with enrollment. And I know that there's a lot of misconceptions around how folks enroll and things like that. So this is a big one. We get it all the time. I know we've addressed it during the presentation, but I certainly want to make it clear. And I'll give this one to Heather. There's a huge myth out there that you have to open up an ABLE account in your state of residence. Could you clarify that for us and maybe tell us why people have that misconception?
Absolutely. Okay, so to be clear, you absolutely do not have to open an ABLE account in your state of residence, and I think this is probably one of the biggest myths out there. I think there's so much confusion revolves around this issue because when the Federal ABLE Act was originally passed in December of 2014, there indeed was a state residency requirement attached to it where folks essentially would have had to wait for their own state to launch an ABLE program in order to open an ABLE account. 1 year later, though, in December of 2015, the Federal ABLE Act was actually amended and this state residency requirement was removed from the law. So as Chris mentioned before, 25 states have now launched ABLE programs. Most of them are nationwide programs, meaning, residents of any state can open an account in their program. So many times when I see people and they say, I can't wait to open an ABLE account, I'm waiting for my state to launch, that's you don't need to do that. Now, there may be certain reasons why you would want to wait and to open an in-state program. For example, if your state is going to offer an income tax deduction, that may be one factor that sways you toward an in-state program. But you also need to realize that not every state will launch an ABLE program. As Chris explained when he went through the technicalities of the bill, when the bill passed, it authorized states to set up their own ABLE programs, but did not require them to do so. So while we've been incredibly pleased that 25 states have launched so far, and there are probably a half a dozen more or so that we know of that will be launching, not all states will have an ABLE program. So bottom line, ABLE accounts are available right now across the nation. I would actually recommend going to our website. There's a comparison tool on the ABLE National Resource Center website where you can actually line up state programs next to each other to see which one will be a good fit. And don't delay. Open an ABLE account soon.
Great, great. And just to continue on that myth there. Now, if I open up an ABLE account, am I locked into that ABLE account forevermore, or is there an opportunity?
No.
Let's say, how does that work?
Okay, so as you said, one of the rules of ABLE is that a person can only have one account. So unlike a 529 account where you could open multiple accounts in multiple states, ABLE, you do have to choose one program. However, you can transfer your account from one state's ABLE program to another, and to my knowledge, none of these state ABLE programs have a fee involved for this transfer. So an example would be if you are waiting for your state to launch an ABLE program because you know that there's going to be a tax deduction or there is some other reason why you wanted to stay in state, but you really want to open an ABLE account now to start accumulating funds, you can open an account in a different state knowing that once your state launches their program, you can very easily just transfer it over. It's called a program-to-program transfer of an ABLE account. Again, still only having one account, but you are certainly not locked into one program for the rest of your saving days.
Gotcha. Okay, that's great to know. Thank you. And as our last myth that we'll be talking about today, again, it has to deal with enrollment. Does an individual have to contact or visit a brick-and-mortar bank in order to open an ABLE account, or how does that work?
Absolutely not. Actually, ABLE enrollment is very easy. It's done online through all of the states. And it is not the type of, most brick-and-mortar banks you will not be able to open an ABLE account. And if you do walk into your local brick-and-mortar bank and they are advertising ABLE accounts, I would be a little suspicious about that maybe they don't know all of the rules. The ABLE program has to be run by an agency or instrumentality of the state. So in most states, it's run by the state treasurer's office or 529 program. And so it is a direct portal online through the state ABLE program website to be able to enroll in that account.
Gotcha, gotcha. So the majority of, if I want to enroll and I'm an eligible person, I meet the eligibility criteria that we discussed. In most circumstances, in most programs, I actually do it online through that state's particular ABLE program website. Is that right?
Yep. Absolutely. And
okay.
Again, you can go to the ABLE National Resource Center website. We have a page for every single state ABLE program. And on that page, you can look at the specifics of the ABLE program offerings for that state. And also there's a direct link to that state's website. So then you can get on the website and take a look and enroll through there.
Great, great. Thank you. Okay, well, we've covered a lot of the misconceptions that I know that a lot of the disability-related organizations are hearing and the ABLE state programs are hearing. And I thank Stuart and Heather for lending their expertise to kind of putting right some of these things that we've heard that aren't exactly accurate. And we've talked a lot about kind of what provisions and components kind of oversee all the ABLE programs, but I want to turn for at least a little bit to our third panelist to really tell us a little bit about an example of what these programs look like on the ground. And there's no better person to go to than Keith Bernhardt, who is the Vice President of Retirement and College Products at Fidelity Investments. and his role, Keith's role, is to oversee the development of Fidelity's ABLE product. So with that, let's hear a little bit from Keith in terms of if you could tell us how does Fidelity kind of fit into the ABLE space, and how did you guys get involved, and how does that particularly work?
Yeah, thanks, Chris. So Fidelity launched the Attainable Savings Plan in the May timeframe, and Fidelity serves as both the program manager and investment manager on the plan. The Attainable Savings Plan is offered actually by the state of Massachusetts, but it's important to note, as you all mentioned earlier, this is one of those plans that is available nationwide to individuals and families, not just to Massachusetts residents. As the program manager and investment manager, Fidelity has the job of hosting the website, providing the information to people that might be interested in the plan, customer service, answering questions. We've got dedicated representatives to help out with questions that people might have. Also, with our investor centers, we have over 180 of them across the country that could help out families with questions and interested in enrolling as well. We also do the investment management, so the investment offerings within the plan are managed by Fidelity, and we work closely with the state of Massachusetts to make sure we've got a good product. And basically, we thought it made sense, it was the right thing to offer an ABLE plan. We really feel that having that aligns with our goal and as a whole to help inspire better futures for people across America, whether it be saving for retirement, college, or for the needs of a person with a disability.
Great, great. Well, we certainly appreciate Fidelity being involved in the ABLE space, and we're always, talk about having as many choices as possible so that folks with disabilities can find a program that meets their particular needs. I want to back up for a second because I think there's another misconception out there that we often hear about, and that's the fact that these accounts, while we often describe them as savings accounts, they really have a strong presence of actually being investment accounts. And the funds contributed into the account are invested into whatever particular investment choices that program might be offering. Could you tell us a little bit about how many investment options are actually provided through the Attainable plan and how they might vary from one another?
Sure. So you make a good point. As you all noted earlier, a big benefit of an ABLE savings plan is the tax benefit. So when you put money into the account, the money will grow tax deferred, meaning it's not taxed while it's in the account, and that money can grow and not be taxed while it's in there. When you take the money out, you won't be taxed on the earnings. Remember, the money you put in has already been taxed from federal purposes, but now when you take it out, if you've given that money time to grow, you won't need to pay tax on the earnings if it's used for a qualified expense. And thus, it can be a very powerful investment vehicle and a long-term savings vehicle. We have options that range from quite conservative, simply a money market option for those that want to take less risk and need more immediate action, access to their money for short-term expenses, and then a range of investment options that provide different levels of exposure to the stock and bond market. So if you only want to have a 20% exposure to the stock market, we've got an option that would work for you. If you want roughly 50-50 or more balanced type of investment exposure, we've got an option for that. And if you want to be more aggressive and invest more fully in the stock market, we've got options for that as well. So we try to provide a range of options for people that have different investment objectives.
Gotcha. Now, I know you guys haven't been up and running for an incredibly long period of time, and in fact, nobody really has, because these programs and these accounts are pretty new options for people with disabilities. But having kind of listened to the myths that we touched on and some of the information that we've been providing today, through your program, have you been hearing any type of resounding or one myth or misunderstanding that's been more prominent than others?
Yeah, I'd say probably the biggest is the concern as it relates to the impact to benefits. There is a continual concern about that, and will SSI really not be suspended if I open up one of these accounts and have money in my in a disabled person's name? So we're often guiding people on the specific guidance that the Social Security Administration has provided, and I think you all covered that quite well. You can do this. The one that I would mention that hasn't been covered as much in the discussion today is a lot of folks have been saving other ways, and they're hoping to roll money into an ABLE account, whether it be from a 529, from a special needs trust, or even from retirement accounts. And I guess I'd like to stress to folks that money coming into an ABLE account needs to be effectively cash, whether it be by check or an electronic contribution. You're not permitted to roll things like stocks or bonds or other, mutual funds that you might have. You can't move that into an ABLE account. It needs to come in as cash. And right now there really aren't provisions for allowing for a transfer from a retirement account and not have to pay penalties on an early distribution or taxes on an early distribution from a retirement account. And you all did mention the idea of a 529 as well, and that you can't roll from a 529 to an ABLE account without potentially owing taxes and penalties either. So that's one of the things I wanted to get out there for folks to understand.
Yeah, that's an excellent point. I know that we get a lot of questions, and in fact, we've gotten so many questions about being able to roll a 529 college savings account over into a ABLE account that there's actually been legislation filed that, if passed, would allow for a rollover of that kind. It would still be subject to the $14,000 annual contribution limit, but would try to a certain extent to address that issue so that folks can bring over those funds that they might have saved. So we're keeping a close eye on that and certainly advocating in its favor. I want to go to and try and touch on a couple of the questions that we received through our Q&A portal before we finish up. We've got about 5 minutes here. So one of the questions states, is there a limit on how much can be spent on eligible expenses in a single year? And to my knowledge, and correct me if I'm wrong, any one of our panelists, no, certainly not in the federal law, and I haven't seen any program put a limit on how much money can be dispersed for the purposes of a qualified eligible expense in any given year. Is that the same as everybody else has heard? I certainly could go to Keith. You guys in your program, you guys don't have any parameters in terms of how much money can be dispersed for a eligible qualified disability-related expense in any given year. Is that right?
No, there's no limits like that at all.
Right, and from what I believe, there's no limits related, certainly nothing in the federal law that states that, nothing that I'm aware of in the programs that are currently been offered that would prohibit an individual from making as many disbursements of whatever size they would like, provided obviously that there's funds in the account to do so. Another question here, let's see. Please explain the limits on the account owners that can deposit from income from work. So this is a good question. So I think it was Heather who touched on this, is that anybody can contribute into a person's ABLE account, including the beneficiary or the account owner, which is the person with a disability themselves, and oftentimes they would be able to contribute into their own ABLE account as a result of earnings from employment. And again, they can contribute into their own account, provided that it's within the parameters of that $14,000 cap. That's all contributions combined. But it is important in terms of how it can affect their federally funded means-tested benefits. Those are often broken up into two criteria, which is assets, which ABLE helps the individual build assets that will not be taken into consideration when terming eligibility. But earned income is another provision that many of these means-tested benefits look at. And even if the beneficiary directly deposits earned income into the ABLE account, that earned income is still counted as earned income despite it going into their ABLE account with respect to their eligibility for means-tested benefits. So that's an important differentiation that folks should be aware of. So it will count in terms of what's called substantial gainful activity. So that's certainly important. Another question, why is the age before their 26th birthday? Where does legislation propose to change that age limit stands? So that's another great question that we often get. Actually, in the original legislation, there was not, it did not include an age provision related to when the person first experienced their disability, but as the legislation made its way through the legislative process, it ended up getting scored, which means it has to be determined how much money that bill is going to cost to implement to the federal government, and it came back an extraordinarily high number, so much so that it would have been very difficult to get it passed through Congress, so they needed to make certain types of changes in order to make it more palatable from a financial or fiscal standpoint to get passed, with the understanding that they would go back in and start raising that age, of which we're happy to report they have filed a bill both in this last 114th Congress and again just a few months ago that would raise that to age 46, and the disability community is certainly supporting that in terms of helping even more individuals with disabilities plan for a brighter economic future by having the opportunity to save funds in these accounts. So with that, I think we're about a minute over. We have a lot of questions that have been submitted, and we're going to work to address those questions and try and get those questions answered through our social media and through our website. So I encourage folks, if you are not already doing so, to follow us on Facebook and Twitter, where we'll be getting more information out about the campaign, including marketing videos and including informational videos and information about our webinars that, again, will take place each Wednesday throughout the month of August. And certainly check in with our website. There's a lot of new materials on there. There's what we're calling a roadmap to enrollment, which takes you through a lot of this information that we've covered. This webinar is being recorded and will be placed on the website hopefully within the next week or so. Again, I want to thank our guest panelists, Heather Sachs, Stuart Spielman, and Keith Bernhardt. Thank you so much again for lending us your time and talents to the webinar, helping folks better understand the benefits of ABLE and what it looks like on the ground. And thank you to everybody who is registered. Hopefully we'll be seeing you again next week at the same time for our webinar that will be digging into the different aspects of eligibility. So until then, have a great rest of the week. Thank you all.